This is part 3 of my car insurance experiment, and what I'm about to reveal will prove that cheap car insurance companies have turned claim denial into a profitable business model. I'm Alex, and over the past 2 weeks I've been testing both a $24.50 per month policy and a $387 per month policy to see what you really get for your money. What I discovered about how cheap insurance companies handle claims will make you question everything you think you know about insurance protection. But first, let me tell you about the phone call that changed the entire direction of this experiment. Last Friday, I called both insurance companies with an identical fake claim. I told them I had been in a parking lot fender bender where I backed into another car, causing about $3,500 in damage to their bumper and $1,800 in damage to my car. I had photos, witness information, and I was clearly at fault. This was a straightforward, simple claim that should be handled routinely by any insurance company. The response I got from each company revealed everything you need to know about the difference between cheap and expensive insurance. When I called the cheap insurance company, the first thing they told me was that I needed to fill out a 4-page claim form and submit it within 72 hours or my claim could be denied. They also informed me that they would need to conduct a full investigation which could take up to 30 days, during which time I could not repair my car or discuss the accident with anyone without their permission. But here's the shocking part. The representative then told me that based on my description of the accident, there was a good chance my claim would be denied, because backing into another car could be considered intentional damage rather than an accident. I asked them to clarify what they meant by intentional damage, and they said that if their investigation determined I should have seen the other car before backing up, they might classify this as negligent rather than accidental damage, which isn't covered under my policy. Let me repeat that. They were suggesting they might not cover an accident because I should have been more careful. This is the kind of language that allows insurance companies to deny almost any claim if they want to. When I called the expensive insurance company with the exact same scenario, the response was completely different. The representative immediately took responsibility for handling everything, told me they would contact the other driver's insurance company to arrange payment, scheduled an appraiser to look at my car the next day, and arrange for a rental car to be delivered within 2 hours. No forms to fill out, no waiting period, no suggestion that the claim might be denied. They treated it like what it was, a routine accident that their customer needed help with. But this was just the beginning of my investigation into claims handling. I decided to dig deeper into how these companies actually process claims, and what I found was a system designed to discourage people from filing claims and to minimize payouts when they do. I obtained the internal claims handling guidelines from the cheap insurance company through a former employee who agreed to speak with me anonymously. What they revealed will shock you. The cheap insurance company has what they call a challenge protocol for every claim over $1,000. The protocol requires adjusters to find at least 3 reasons why the claim could be denied or reduced before they approve any payment. These reasons include things like failure to properly maintain the vehicle, failure to avoid the accident, failure to immediately report the accident, or any inconsistency in the customer's story, no matter how minor. The goal isn't to fairly evaluate claims, it's to create enough doubt and bureaucratic hassle that customers either give up or accept a reduced settlement. For example, if you file a claim for hail damage, but you can't prove the exact date and time the hail occurred, they can deny the claim for failure to properly document the loss. If you file a claim for a collision, but you didn't take photos from every possible angle immediately after the accident, they can reduce your settlement for insufficient documentation. This is why 40% of initial claims with cheap insurance companies are denied or underpaid, forcing customers to appeal, hire lawyers, or simply give up and pay out of pocket. Meanwhile, the expensive insurance company operates on what they call a coverage-first protocol. When they receive a claim, their first step is to assume the customer has valid coverage and look for ways to approve and pay the claim quickly. They only investigate potential fraud or denial if there are obvious red flags. This is why their customer satisfaction ratings are so much higher, and why they actually pay out a higher percentage of premiums as claims than cheap insurance companies do. But the real eye-opener came when I tested both companies with a more complex scenario. I told them that 3 weeks after my parking lot accident, I discovered that the impact had caused damage to my car's suspension system that wasn't visible initially. The repair shop was now telling me I needed an additional $2,200 in repairs that were directly related to the original accident. The cheap insurance company immediately accused me of trying to commit fraud by adding damage that wasn't related to the original accident. They demanded that I provide an independent mechanics report, proving the suspension damage was caused by the accident and not by normal wear and tear. They also informed me that any additional claims related to the original accident had to be filed within 15 days of the original claim, and since I was now past that deadline, they might not cover the additional damage at all. Even if they did approve it, they said I would need to pay a separate deductible for the additional damage since it was being filed as a supplemental claim. The expensive insurance company said this type of delayed discovery damage happens all the time, and they would handle it as part of the original claim with no additional deductible. They immediately authorized the additional repairs and told me they would work directly with the repair shop to ensure everything was covered. This is when I realized that the true cost of cheap insurance isn't just the risk of major accidents, it's the constant friction, denial, and hassle every time you need to use your coverage for any reason. Cheap insurance companies make money by making it as difficult as possible to file claims and by paying as little as possible when they do pay. But I wanted to take this experiment even further. I decided to test what happens when you try to get information about your coverage that isn't clearly spelled out in your policy documents. I called both companies and asked them a series of detailed questions about my coverage that any informed consumer should be able to get answered. I asked about coverage for rental cars if my car was stolen rather than damaged in an accident. I asked about coverage for personal items that were stolen from my car. I asked about coverage if I was injured in my own car as a passenger when someone else was driving. The cheap insurance company couldn't answer most of these questions. The representatives kept putting me on hold to ask supervisors, and several times they gave me contradictory information. When I asked for written clarification of their answers, they told me I would need to file a formal inquiry and wait for a response from their legal department. The expensive insurance company had detailed answers for every question and immediately emailed me written clarifications of every coverage detail I asked about. They also proactively explained several coverage scenarios I hadn't even thought to ask about. This is when I understood that expensive insurance isn't just about higher coverage limits and better claims handling. It's about buying coverage from a company that actually understands their own policies and can help you understand yours. But the most shocking discovery came when I started looking into the long-term consequences of filing claims with each company. I found out that the cheap insurance company reports every claim to industry databases that other insurance companies use to determine your rates, even if the claim is denied or you decide not to proceed with it. This means that just calling to ask about coverage for potential damage can result in higher rates when you shop for insurance with other companies. The expensive insurance company only reports claims that result in actual payouts, and they have a first accident forgiveness policy that prevents your rates from going up after your first at-fault claim. So not only do they handle claims better, they also protect your future insurability in ways that cheap companies don't. This led me to calculate the true cost of ownership for each policy, factoring in not just the monthly premiums, but the hidden costs of claim hassles, potential denied claims, and long-term rate impacts. When I factored in the risk of having a claim denied or underpaid, the expected cost of a settlement delay that requires you to pay out of pocket initially, and the impact on future insurance rates, the cheap policy actually costs more than twice as much as the advertised premium when you calculate the lifetime cost of ownership. But here's the most important discovery from my experiment. The difference between these policies isn't really about money, it's about two completely different philosophies about what insurance should do. Cheap insurance companies view their customers as potential fraudsters who need to be managed and minimized. Every claim is approached with suspicion. Every interaction is designed to discourage future claims, and the entire business model is based on collecting premiums while paying out as little as possible. Expensive insurance companies view their customers as partners who deserve protection and service. Claims are approached as opportunities to help customers through difficult situations, and the business model is based on building long-term relationships with customers who are willing to pay for real protection. I want to show you exactly how to evaluate your own insurance using the framework I developed during this experiment. First, call your insurance company and ask them to walk you through a hypothetical claim scenario. Pay attention to how they respond. Do they immediately start asking about potential reasons the claim might be denied? Do they seem helpful and knowledgeable, or do they sound like they're reading from a script? Second, ask for written documentation of all your coverage details, especially the fine print about what's not covered. If they can't or won't provide this information quickly and clearly, that's a red flag. Third, research the company's financial strength rating and customer complaint ratio with your state insurance commissioner. A company with poor ratings or high complaint ratios is likely to give you problems when you need them most. Fourth, calculate the real cost of your coverage by factoring in your deductibles, coverage limits, and the risk that a major claim could exceed your coverage. Most people focus only on monthly premiums and never calculate what they'd actually pay out of pocket in a real emergency. Finally, consider the peace of mind factor. Insurance is supposed to protect you from financial worry, not create more of it. If your current policy makes you nervous about whether you'd be covered in an emergency, then it's not doing its job regardless of how cheap it is. In next week's final episode, I'm going to reveal the exact insurance configuration that provides maximum protection at a reasonable cost, share the 5 must-have coverage types that most people skip, and give you the negotiation strategies that can get you premium coverage at a substantial discount. I'll also reveal the insurance company that surprised me by offering better coverage than my expensive policy at a significantly lower cost, and the one coverage type that can protect your entire family for just a few dollars per month, but that 90% of people don't even know exists. But most importantly, I'm going to give you the tools to become your own insurance expert so you never have to wonder if you're protected or just think you're protected. The stakes are too high to get this wrong, and after completing this experiment, I can tell you with certainty that the most expensive mistake you can make with car insurance is trying to save money by buying cheap coverage. Subscribe and hit the notification bell for part 4, where I'll show you exactly how to build bulletproof insurance protection that won't break the bank and will give you total peace of mind every time you get behind the wheel.